Welcome back, everyone. It's the end of another trading day and time for us to do our deep dive.
Always exciting to see what's been moving in the Singapore market.
Yeah, for sure. So today we've got quite a few interesting things to unpack.
Looking forward to it.
We're going to be looking at Capitaland, Right?
Clark?
Clark, yeah? Cromwell European Real Estate Investment Trust?
Cromwell E-REIT.
We'll look at Singapore Airlines.
Yeah,
SIA, yep. And then we'll wrap things up with a quick glance at Singapore's NODX numbers.
Always a good indicator of the broader economic picture.
Absolutely. So let's jump right in. Car, right off the bat, they're making a pretty big move, wouldn't you say?
Definitely catching attention.
A $150.3 million acquisition. That's not small change.
No, that's a significant investment.
In a logistics property in Indianapolis.
Interesting choice.
This is actually, if I'm not mistaken, their first sale and leaseback deal in the U.S.
That's right, it is.
So I guess the big question is, what's behind this strategic decision? Why are they, going this route?
Well, I think a couple of things are at play here. First, you have to consider the broader context of e-commerce and how it's completely reshaping the logistics landscape, not just in the U.S., but globally.
Yeah.
And this move by CERE, I think, really signals their confidence in the potential of the U.S. logistics market in particular. But then, when you look specifically at the sale and leaseback structure of the deal, that also tells you something about CERE's approach.
Makes sense.
You see, sale and leaseback deals can be pretty advantageous for REITs.
Like Clark.
Like CERE, exactly. It allows them to acquire assets,
Yeah.
but then immediately secure a tenant,
Built in.
which of course in this case would be the seller,
I see.
and that provides immediate cash flow.
Right.
So it's kind of like hitting two birds with one stone.
Makes sense.
But like any investment, there are always risks to consider.
Yeah.
I mean, with a sale and leaseback deal, you have to really scrutinize the tenant's creditworthiness. You need to make sure they're going to be able to make those lease payments reliably.
Yeah.
And of course, you have to assess the long-term viability of the asset itself.
Of course.
Is it going to hold its value? Is it going to generate that steady income stream that REIT investors are looking for?
Especially in a sort of dynamic global economy like we're seeing now.
Precisely. Uncertainty is the name of the game.
Seems like it. All right. Well, let's move on to Cromwell E-REIT. They're in the news because they're refinancing some of their loans.
Always an interesting move for a REIT.
Right. But there's a bit of a twist here. The interest rate on these new loans, it's actually higher than before.
Yeah, that might seem counterintuitive at first glance.
Yeah, you'd think they'd be looking for a lower rate, wouldn't you?
You would in most cases, but sometimes it's not just about chasing the absolute lowest interest rate.
So what's going on here then?
I think Cromwell E-REIT might be prioritizing stability, particularly in the current kind of shaky interest rate environment.
Unpredictable.
Yeah. By refinancing at a slightly higher rate now, they might be able to lock in a much longer loan term.
Which would give them, predictable debt obligations for a longer period.
Exactly. And that can be very valuable in a market where rates could potentially spike unexpectedly.
Makes sense.
And another important factor to consider here is the sponsor's involvement.
Oh, right. The sponsor is injecting, what, 4 million euros?
That's right.
During this refinancing process.
And that's a significant signal.
Yeah, what does that tell you?
Well, for one, it demonstrates the sponsor's continued commitment to Cromwell E-REIT. They're putting their money where their mouth is, so to speak.
Yeah, they're literally putting their money in.
And for investors, that can be very reassuring.
Especially when you're talking about a higher interest rate on a loan.
Right, absolutely. It helps to mitigate that concern. It shows that the sponsor has confidence in Cromwell E-REIT's long-term strategy.
Yeah, it's like a vote of confidence.
Exactly. And that kind of confidence can be contagious, especially in a time when the market is, well, let's just say, a little jittery.
Makes sense. Okay, now let's shift gears a bit. Let's talk about Singapore Airlines, SIA.
Always a fascinating one to watch, a real bellwether for the travel industry as a whole.
Yeah, absolutely. And they've released their November passenger traffic figures.
The numbers are in.
And it looks like people are flying high again because SIA and Scoot, their budget arm, saw passenger traffic jump by over 8% in November.
Pretty impressive.
That's a total of 3.3 million passengers. So, is this a sign that, the airline industry is finally back on its feet after all the turbulence of, recent times?
I think it's definitely a positive signal. It shows that the demand for air travel is continuing to rebound.
people want to get out there.
They do.
Yep.
But we have to remember that the airline industry is still facing some pretty significant headwinds.
Yeah, like what?
Well, fuel costs, for one, they remain stubbornly high.
Right.
And then you have the global economic uncertainties that we've been talking about. A potential slowdown in global growth could easily impact travel demand going forward.
Yeah, so it's like things are looking up for SIA, but there are still some storm clouds on the horizon.
Exactly. Their long-term success is going to depend on how well they navigate these external challenges.
Interesting times, for sure. Okay, before we wrap up, let's take a quick look at Singapore's NODX numbers for November.
Always a good pulse check on the health of the Singaporean economy.
And the November numbers, they actually paint a pretty encouraging picture. Year-on-year growth of 3.4%.
Not bad at all.
And a big part of that growth is being driven by electronics.
Especially integrated circuits and disc media products.
Yeah, those were real standouts. So what does this tell us?
Well, for one, it suggests that global demand for tech is holding up pretty well.
Even with, the talk of slowdowns and everything.
Right. Despite all of that, there's still a healthy appetite for these kinds of products.
And that's good news for Singapore.
It is. It suggests that a lot of Singaporean industries are going to benefit from this continued demand.
Yeah, all those companies that are part of the tech supply chain.
Exactly. So it's definitely a positive signal for the Singaporean economy overall.
Well, so there you have it. A bit of a mixed bag in the Singapore market today.
Always is.
Claire expanding in the U.S. SIA's passenger numbers are up.
Positive NODX figures.
Signs of growth and resilience. But like you said earlier, it's a dynamic landscape.
That's right.
And there are those global economic headwinds to keep in mind.
Absolutely.
Who knows how things will unfold in the coming months, but it'll certainly be interesting to watch.
Indeed it will.
Well, until next time, happy investing, everyone.
Happy investing.